Okay, today is kind of a different thing. I'm going to give you 3 stocks to buy for August 2026 and 1 stock to absolutely avoid. And if you hang on a little bit longer, I'm going to give you a bonus stock. All right, I mean, it's going to be quick. We're going to be in this. I'm going to give you key points, and I hope you enjoy. Hey there, my name is Anthony, and welcome to Growing Your Wealth. Okay, it's not my number 1 stock to pick, but the first stock I want to talk about is CELH Holdings. I have some other videos on it. I think CELH is a great growth company in the energy sector, the beverage sector. And there are many key reasons why I like this business. Obviously, they're starting out, young, vibrant. They're growing actually rapidly. They're purchasing other businesses. They're doing a lot of good things. And CELH is in a competitive, environment for the energy drink sector. You've got Red Bull, Monster, dominant. But CELH has taken market share, and they are growing fast, and they are hitting on so many topics with Gen Zers, younger millennials, and maybe eventually Gen Alphas when they get to that age. But they have so much room inside the United States alone, not to mention the rest of the world. So their market share is absolutely phenomenal. They have so much to take. Okay, so they can come for a lot. I mean, they're only doing, I think, 20% right now. I think on the last earnings, they said they're only touching 20%. Monster and Red Bull have the rest, but they're coming for more. And they're such a small company. I think they're trading at what, $7 billion. As of recording this video, they're trading at a $7 billion market cap. Another thing is for a growth company, they're trading actually fairly cheap, for a company that's growing double digit. 17 times earnings, forward earnings. I even believe that's a little bit low, but trading that low, yeah. Maybe for a mature monster, maybe 15 to 17 times, but not for CELH Holdings. The international expansion, like I said, is it's untapped. It's a question mark, because there's a lot of regulations that come down on, countries in the UK, and Europe. But it's an untapped market, and I believe CELH is adopting. They're changing their entire footprint for a more healthier, fitness-based. They're reaching demographics of the younger generation, women, and I believe that they're going to be able to overcome that international market. Okay, retail shelf expansion. Okay. They're growing their shelf expansion. They're taking more and more shelf from the incumbents, Red Bull and Monster. So as they continue to take market share, shelf space, they're going to grow. It's inevitable. It is what it is, and they have to continue to, I think, continue to resonate. They're taking market share. They're taking shelf space. Okay. Here's another thing. CELH isn't a one-trick pony anymore. These guys have expanded into Alani Nu, Rockstar. They're hitting the different demographics. Women, it's kind of wild because not many women really like energy drinks. And before Alani, hit the market, my wife was just like anti energy drinks, and then Alani Nu came out, and she's just like, "Oh, I love Alani Nu," and I was like, "Oh yeah, Rockstar, or not Rockstar, but CELH owns them, I'm invested in them." So they're hitting the correct people. They're just expanding different flavors, different, they're not just focused on energy. They have many different focuses on health-based, like, being conscious around healthy stuff, spritz and seltzers, but non-alcoholic, of course. And also beverage companies, they have high gross margins once they become mature. And I believe over time, this is where CELH is going to go. I believe that trading around $27, $28, $29, anything under 30, anything under 40. You know, I think what analysts have the median price target is like at like $55 a share. You know, that's substantial from here. That's like, you know, around 30 times forward earnings. I think it is the prime time to get in. August 2026, this company, while they're beat down, people, you know, everybody wants to sell it. This is a time to get in because I believe the runway for Celsius is massive. And I'm continuously buying. I'm buying every single week, especially at these prices, okay? So we are going to go on to my next number, okay? I've talked about this many times in my videos. e.l.f. Beauty. I mean, what can you say? e.l.f. Beauty is misunderstood by the market. It's just a beautiful company. You know, I think what Trang Amin is doing over there, you know, at e.l.f., he's doing what the bigger incumbents did in the 80s and 90s. He's resonating with this specific demographic of women, even men, believe it or not. Their revenue growth is, I mean, it's really good. Double-digit revenue. You know, people freaked out. This is why this company sold off so heavy. In 2024, maybe 5, I don't know. Whenever they hit their you know, top was $200+. I mean, they were doing 80%, 90%. You know, it's like, oh my goodness, how much higher can you go? And then they brought it down to 50% and 40%, and now they're doing, you know, 25, 30, 40%. I mean, it'll fluctuate, but investors are freaking out and they're just selling this thing down, but it's growing at 25, 30, you know, 20%, whatever it is. You know, they're buying back shares, net income. I mean, they're making lots of money. Earnings per share is, you know, elevated. You know, that's growing as well. I mean, I'm okay with it. Sell it down. But you cannot sell down great companies for a long time. I mean, they're eventually just going to take off. And that's what e.l.f. has done over the past, I don't know, what, month and a half. It's up like 30%. You know, it's down to $48, $49 a share. Not, what is it trading at now? 70 something a share? Let's see. At the time of recording, $77 a share. And what just happened right there? Okay, $77 a share, you know? So by the end of this year, like, I would not be surprised. By the end of 2026, I would not be surprised if e.l.f. is trading above 100, even 110, $120 a share. The way this company's growing, it's blowing away the incumbents, okay? There is concerns, you know, with tariffs. I think tariffs are one of the biggest things. The net income, there's many questions about that. But my goodness, their balance sheet, solid. You know, they have very strong cash flow. Their innovation with product, you know, putting new things out, high-end, Rhode Beauty, Naturium, their expansion, you know, who knows who else they're going to buy. This company is growing, and I don't see them just growing for the rest of this decade. I'm talking about, you know, they could be, you know, L'Oreal in the 1980s. They could be, you know, Estee Lauder in the 1990s. I believe they're going to go to 100 this year. You know, how much further north of 100, I don't know. But like my long-term thesis on them into the 2030s, $500, $600 a share. I mean, it's only a $3 billion company. Oh my goodness. Okay, 4.55. You know, that's where they're at right now. 4.55 as the time of recording. And let's see what their forward metrics are. Yeah, I mean, 23 times. You know, based on analyst numbers, and honestly, I think that's kind of low. I mean, I think that's kind of high. I think they're probably right around 17. So, yeah, e.l.f. was a buy. August 2026, e.l.f. is a buy. Buy them up. I'm still buying. I'm still buying e.l.f. You know, so even, you know, I'm weighing the green on my position. Still buying it. I don't care. This is a long-term hold. Okay? All right. Stock number 3. Hey, you know, many people don't like this company, and I get it. You know, it is extremely volatile. And I've talked about it in one of my other videos, but it's Upstart Holdings. Upstart Holdings is, I think it's one of the businesses that will
cash in on this AI lending sector. And the thing about Upstart, their loan originations, they're growing rapidly. Okay, also on this, the addressable market is massive. Okay, I mean, they're just doing auto lending, maybe a few HELOCs here and there, small dollar loans. They're not even doing anything spectacular, but the mortgage opportunities, my goodness, we're not even into the holy grail. They only do business with maybe just a little bit over 100 banks. How many do we have in the United States? Credit unions, banks, lots. I think it's, I don't know the exact number. I don't have it written down, but we have lots of banks, and they're only tapped into a few, and they're extremely asset light. They don't have much on their balance sheet. There was some talk, in the past, how they were adding more of their debt to their balance sheet because they were taking on these loans and throwing them onto their balance sheet, but it wasn't actually the case. But that's another story. I'm just giving you my reasons for why I'm bullish on this. There was something that transparency information. Okay, there was a lot of transparency for investors. I think they started in this year. They started giving out what was it? They're publishing loan origination data every single month to update their investors on businesses that they're or loans that they're taking on, what's coming on their balance sheet, what's going off their balance sheet. So there's more transparency. There's also many more catalysts that can expand the business. More funding flexibility. You have lower funding costs, and they have greater control over the lending ecosystem. I think they're eventually, once their AI system gets smarter and smarter, they're going to be loaning to more and more people, and banks are going to see that the default rating is equal to that of the TransUnion, FICO, Equifax, all that. But there are big risks. This is still there's a lot of high risks involved in this. The business is sensitive to credit conditions and rates. What the Fed has to say. Profitability. I'm going to give them leeway here on their profitability. They've been unprofitable and then profitable. It's back and forth, but I think going forward, 2026 and beyond, I think they're starting to really figure it out. With David Gerard, going out the door and Paul Gu coming in. Well, it's a seamless transition. It's not that they're replacing him; it's the same basically brain, but just with a younger guy with a more intact, millennial mind. And I think he's really going to transform this business going forward. So with the prices in the dumps, this business is still, what is it? Where are we at? A $2.5 billion business. What does the forward metrics look like on this? The analysts have it at 35 times. I don't know. That's a possibility. I guess I could see it. I'll have to go back and dive into the numbers and see what everything is. I just believe that. I believe Upstart has a great opportunity into the future. Okay, just understand, Upstart isn't it's not a conservative investment. Just know that. I'm bullish on it, but it's not a conservative investment. I believe they built themselves. They've been in the business for 14, 15 years now. There's a lot of potential with this business. So just kind of look at it. Listen, I'm going to listen to the earnings call and I'm going to update you guys, but these are this is my number 3, especially where it's at right now. It's in the dumps. I believe it's going higher the rest of the year, and just hold me to that. I believe it is. Just hold me to it. So Upstart, check it out. Okay. So we've got to talk about the stock to absolutely avoid. And before I get into it, many people were coming to me before this company went IPO. And since I said that, you already know which company it is. It's SpaceX. And everybody was asking me, hey man, I gotta buy SpaceX. Should I buy SpaceX?
what do you think about SpaceX? And I was like, look, dude, I was like, if you gave me $1,000, I am not going to buy SpaceX, even if I have nothing to lose. I'm not touching that company. And the reason why is, well, I mean, there's a lot of reasons, but trading at, I mean, what is it? Now it's it's a 1.5 trillion, but it got up to what, 3 trillion, $3+ trillion. I mean, for a company that's unprofitable, that's maybe bringing in, I don't know, $20 billion in revenue. Yeah, no, please stay away from this company. Don't touch it. This isn't financial advice, but I'm telling you, you do not want to, don't even look at it. If it goes up, who cares? It's going to come down. And what you have to understand about SpaceX is it's not just the space exploration stuff. It's it's Twitter or X. It's XAI, Grok. It's, what else is there? There's a what is it? Gosh, Starlink. Okay, that had to look. Starlink. I think there's one other thing in there, but yeah, I mean, no, not for 1.5 trillion, not for $750 billion. If this thing goes down to, maybe $100 billion, maybe, but it's unprofitable. And it's, and the thing that you have to understand about IPOs is IPOs aren't coming to the market because they're super profitable. They're coming to the public market because they need our money to grow. So the return on your investment is very limited. Like if you had money to, I guess, just park over there because you thought this company was going to go to 40 trillion, $50 trillion, $60 trillion in 15 years. Okay, sure, whatever. But I don't see that. I mean, there's so many risks with this business that I'm staying away from it. And I hope everyone who sees this video stay away from SpaceX. Just avoid it. Go away. It's not worth it. You're going to tie up capital for this company to not do anything. I mean, there's so many more possibilities out in the market. Okay, so number one, we have an extremely rich valuation. It's too expensive. Too expensive. Staying away from it for that specific reason. Starship. Well, it's unproven. All of their money comes from the government. Well, not all of their money. Obviously, they have X, they have Grok, but the Starship side, it's all governmental contracts, and you got to fight with NASA. Don't want to do that. There's a lot of sentiment driven on this. It's sentiment galore. Oh my gosh, SpaceX is going to be $100 trillion business. Stop it. Go away from that. No, it's not. I mean, just think about it. $100 trillion or $50 trillion or $10 trillion. I mean, NVIDIA is what, 5 trillion? And that's up there. I mean, they're not expensive, but I mean, that's bigger than some countries, GDP. No, staying away from it. There's another thing that I believe that's going to pressure this stock really bad over the next 6 months, okay? It's these lockups. And people don't understand about lockups. These are the people who bought in, when they were private. They were buying in, when it was 20 billion, 50 billion, 100 billion. They were buying in, giving it to, they were buying into the private equity for the placement. So they're putting their money in, and they have lockup periods, 30, 60, 90, 180, 365. All of these lockups are coming due. So they probably, bought it at $15 a share. Well, I mean, if, whenever these lockups come, let's just say it's $115 whenever their lockup's done. I mean, they made, 8x their money. Say they bought in at $10 a share. 10x their money, it's going to drive more selling pressure. That's more selling pressure. I don't know where the bottom is for SpaceX, but these lockups are going to pressure the stock price, and people are going to get really screwed. It's going to hurt a lot of investors, a lot of retail investors who just think this is the next greatest thing. That's not how IPOs work. That's, it's something we have to address and you have to understand.
And it's going to drive a lot of people out of this market. And it's unfortunate because people are going to get spooked and they're going to say, oh man, this is just, why did I even get in the market? It is what it is. Okay, so we have, heavy capital spending. They're taking our money that we, bought into on this business, and they're using it to expand. And it's all hopes and dreams. I think Elon Musk is a great CEO. He has a lot on his plate, but what's greater than him being a great CEO is that he is he's a great salesman. Man, he can sell you. Look at Tesla. He's been talking about robots for, 50 years now. Not really, but robots aren't there. He's been talking about, the auto taxi, they're not here yet. It was supposed to be by 2025, I believe. It's not here yet. He's a great hype man. I like him as a CEO. I think he has great ideas. He has great investments, but he's a hype man. And I'm not knocking him, but I just don't see it. I believe he's hiking this. I believe he's hiking up SpaceX, and it's not there. Their execution risk is extremely risky. It's high. Starship, Starlink, the AI infrastructure initiatives, government launch contracts, future Mars related, it's risky. I'm just stay away from it. I don't want anything to do with this. Let's see. Oh, and well, I think I already talked about it. People expect so much out of this. It's not there. The expectations are extremely high. I just don't, it's not going to happen. Where do I think this stock price will go? I think it could go to, I don't know. What's a fair, I gotta wait for the first earnings, but $1.5 trillion market cap. I don't know, bring it down to, 500 billion. That's, 67% from here. Let's see, 67%, 70, 60, 50. $50 a share, maybe? I don't know. 40, maybe 10. I'm staying away. And I think all of you should really ask yourself. You're probably, if you're invested in this business right now, really understand what you're investing in, because I don't think you have any idea. So SpaceX, no go for me. Sell, avoid, get away. Super bearish on it. Okay. All right, that's it. Oh, but I got one more for you. Hey, check it out. You see it? We are green, baby. We're going back into the green. And what is better than seeing green than to talk about this company? I made a video on it a couple weeks back. Hyliion Holdings Corporation. Wow. What just happened with these guys? Well, we just got a $41.7 million contract approved from the Office of Research of Naval, whatever, blah, blah, blah. It's a big word, but from the military. We got that $41.7 million contract approved. That's big. If you dive into how long it's, I think it's over 3 years, I believe. I have to look into it, but that's super big because the military actually believes in this business, and many investors don't. A lot of people have felt like they've been burned by Thomas Healy and the Hyliion team. I don't know. I think this is a big move. So if this is a super highly speculative August 2026 buy, but man, if you're willing to risk something for an amazing return, I believe this might be it. And something you need to understand, the stock price right now, it's slammed into the trader's hands. It'll shoot up 20% one day and it'll just shoot down 20% the next. It is all over the place. So don't be alarmed. Definitely, if you buy the stock, don't set a stop loss. Just don't do that. Don't try to trade in and out of this. You're going to lose. But really understand what the business is. In August 11th,
I'm ready to listen to the earnings call, see what Thomas Healy has to say. And it could give me more insight to how bullish I could possibly be. I mean, I'm fairly bullish right now. I've been cautious, but I'm fairly bullish. And there's many reasons. This Carno generator could be something great if they execute. If management executes and goes out there into the open market, and meets with these hyperscalers, a Meta, a Google, OpenAI, many different hyperscalers, and they start supplying this energy to them, it could be a massive opportunity for Hyliion and the team, to where, us and investors could see a massive run up. They have a decent cash position. I've got to look at the burn rate. But with this $41.7 million contract right now, it helps ease a little bit of the concerns. They don't have, much debt as well, if they can execute. I mean, trading at what, 600? Okay, it's $660 million, right now. It's a $660 million company. If they can execute, I believe this could 10x quick. And I mean quick, because the market is going to be forward looking. If there's any positive outlook on this business, I mean, it's trading at what, $3.72 as of recording this video right now. It's, so if they execute on this earnings call, if things come out better than expected, I honestly, I believe it can go up 100%, within a week. I mean, this is how volatile this stock is. And if everything starts pointing towards a brighter future for Hyliion, I mean, 200%, 300%, 400%, I mean, a 10x could be literally, you thought SanDisk and Micron moved heavy? Man, with a penny stock down here trading under $1 billion, I mean, man, this could be massive. I mean, you're going to get massive traders, institutions are going to come in. This stock could look extremely different, but you need to know the risks. Nothing is set in stone. Yes, they got that $41 million contract, but nothing is solid. There is a lot of risk with this business, but man, if they execute, this could make many, and I mean many, millionaires. This could make you extremely wealthy, but know the risks. You need to dive into those 10 Qs. You need to go on to X, follow Thomas Healy, see exactly what he's talking about. Don't buy into the the bearish narrative, being so negative. Listen to him, challenge him on it, but be respectful about your thesis on it. Be honest. Don't just, this is garbage. This guy doesn't do anything. Look, man, they're under immense pressure over there at Hyliion. They understand the things that they're having to struggle with coming from the EV space into the linear module, okay, the Carno generator. So just do your due diligence, okay? Get into that 10Q, wait for the earnings on August 11th, and make a decision. But I honestly believe after the earnings on August 11th, this stock is going to move. Which way? I believe it's going up. I believe it's going to go up fairly decent. And I think some of you investors as well. So, all right, that is it. All right, that is it. I know this is a different video. I'm kind of just roughing it, seeing how this is going to go. I wanted to talk to you guys, speak from the heart. But I want to leave you, as always, with the biblical verse, okay? In Psalm 128, it says, "The Lord keeps watch over you as you come and go, both now and forever." As the Lord is watching over you guys, I want you to watch over your portfolio, okay? God has allowed us to be stewards of our money, and we have to do it responsibly. We have to know what these owners are saying, these CEOs are saying. We have to know what these businesses are doing. So we need to watch over our investments, okay? We need to watch over and understand the risks that we're taking in this market. Yeah, this is a different one. Hopefully I'll look to make some of these more going forward, and I hope you guys, enjoy this. But these are them. You know, Hyliion, Upstart, ELF, and Celsius. Okay, those are my 4 hot buys. Avoid, please stay away from SpaceX. Please, just you'll thank me later, or if you already are away from it, just don't even look at it. Okay, I don't know what next video is gonna play right here. Pew, 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 pew. I don't know what's gonna play, but if you want to, watch it. If not, see you later. All right, see ya. God bless you. Love you. Wait, let me finish that. Let me finish that off. Let me make that a lot better. I don't know what's gonna play right here, but if you like it, watch it. As always, happy investing, and may God truly bless each and every one of you.